we'll go to a NASDAQ. Much more strength behind the NASDAQ. So we can use that six sister idea now. Since we're seeing leadership between ES and NASDAQ, NASDAQ leading on the upside, we could see this as a breaker. So it's low, high, lower low. This up close candle here, higher up close candle, extend that to the right. We traded there, and we would want to see price run through this fair value gap right there on the upside if it's going to follow suit with with NASDAQ. So this is a 5-minute chart, and I'd like to see it run up, come back down, and treat this fair value gap as an inversion. Fair value gap IFVG is what you'll see me annotate my chart with when I'm doing that. The problem is, and this is what I was referring to, we were in a fractal that's kind of trapped between bullish and bearish. And I know you guys are probably getting sick of hearing that, but this is how you learn how to read price action. You don't shy away from these types of conditions because you're going to be presented with them in the future when I'm not doing live streams and you're wanting to participate in the marketplace. You want to know what it is that you should be doing, what you shouldn't be doing. So while NASDAQ has been raging higher, the Dow, let's take a quick look at that, said I'm not coming to the party today. So it went lower, it's taken out sell side. At the same time, NASDAQ higher. So right away, by looking at all three averages, are we looking at a symmetrical market? If you've been keeping notes, symmetrical market is when they're all in agreement and the dollar is supporting that same movement. Dollar's weaker, all averages should be going higher with the Forex pairs. We're not seeing that with the Dow, and there's lethargic price action in ES, which can lead to the sick sister concept, which is where it catches up with the leader. In other words, this might want to run above for buy side, trade into that new week opening gap high or consequent encouragement. I'll roughly eyeball, they call it 38.75. 41.38.75 is the consequent encouragement between this old new week opening gap and old new week opening gap high. So respective low and high and midpoint consequent encouragement, 41.38 and 3/4. I would sit on my hands, do nothing here until we got above this fair value gap. Why? Because it's already showing respect of it. So I don't want to step in front of that and try to go long. Because why? The market's not symmetrical. We're not seeing all three averages moving together in tandem, where they all should be all three going up in agreement, confirming each higher high. In other words, there's a higher high in NASDAQ, there should be a higher high posting in ES, and there should be a higher high posting in Dow. That's simple Dow theory. Blending intermarket relationships and market analysis is by taking the risk on, risk off scenario by incorporating the dollar index. And since the dollar index is weaker, we would be expecting all three averages to move higher, but we're not seeing that yet. So therefore, we exercise patience. Where everybody, we want to see price trade above and then respect this fair value gap. But run the risk of, if it does go higher, it doesn't even come back to that fair value gap. And that's the only thing in these types of conditions where we've had the NASDAQ perform so strongly on the upside. The Dow's firming up a little bit, but using this type of strategy, which is the six sister concept, where it's kind of like playing catch up with the leader, where one market's leading, it may be indicating, I'm not saying it's absolutely the case, but it looks as if the NASDAQ is supporting a willingness to want to go higher. And I think there's unfinished business with ES at that 41.38 level. So 41.38 and 3/4 would be consequent encouragement for midpoint between the new week opening gap high and the low. Let's run through the NASDAQ and Dow real quick so you can see it. This boring stuff. So there's the consolidation and then rally higher. And then let's go to Dow. So here's a six sister idea. What's resting above here? Buy side. Are we there yet? No. So you can look at how we can utilize something like this here. We could drop down. I'm not going to do it here, but this is where I usually drop down into like a 5 second, 10 second, 15 second chart. And I'll buy a fair value gap, buy side and balance, sell side and efficiency right in here. Now, if I was showing you this time frame and I went in and I bought here, invariably, someone would say, look at him chasing price, not understanding that the context behind it would be, number one, the ES is performing, the NASDAQ is performance. Real quick, let's check that out. NASDAQ, higher, firmer, ES, higher, and Dow. Okay, so trading at 879, what was called 880. From 880 to the buy side in here. It's at 11 points or so. It's not a lot, but that's a high frequency scalp. That, what I just gave you, is a high frequency trading algorithm. It will look for that displacement among the three averages. For instance, the NASDAQ's been leading to the upside. This is the part where you write this stuff down, folks. If you're eating bonbons and your slippers are still on, you're just looking out your window, you're wasting your time. High frequency trading algorithms will look for that disparity between the averages. And when there is a buy program, which is what we were outlining this morning, we want to see it have all three averages moving in tandem. They should agree. If it doesn't, that's fine, because it will create this six sister concept. In other words, one of them is sick. It doesn't have the energy, it doesn't have the strength to perform the same way the leader did, like the NASDAQ. But given enough time, it heals, it gets its strength, and then finally moves in sympathy. So it runs in favor of what the stronger one has done. So it pulls, the stronger one pulls this one up. It grabs a hold of it by its hair and drags its rear end up, higher with it. So what the algorithm, high frequency trading algorithm, would do is look for that moment where I just outlined to you. There's a disparity. The orders haven't been taken for Dow yet. So a high frequency trading algorithm would go in there on a drop down on 5 or 10 or 15 second intervals, sometimes less than that. They would buy into that inefficiency. And when it happens, you get that. You don't need me to push a button, folks. I'm telling you what's going to happen. So all you gotta do is just listen, because this stuff repeats every week, every day, and it will not stop. But there's a consolidation. We rallied above it. Fair value gap. Old high. Silver bullet. What's it going to run for? Relative equal highs, buy side. So buying in here, getting out about here. 20 handles or so. But we've already seen this one run. So would you buy that one? No. Go back to six sister. Six sister. This is the strong one. So it's done majority of its run already. Versus Dow. Relative equal highs. And I think it was, what was it? 33,880, I think it was. Lower time frame, high frequency trading would use that on a 5 second, 10 second, or 15 second chart. It would buy an imbalance in here and target these stops above there. So I don't want to buy the weakest one, because it's not always going to be, the weakest one's going to be the best one to trade, because it's going to have a lot more room to catch up with. It may stay weak throughout the session or the day. So the one I'm looking for is the one that was not weak, but didn't keep up with NASDAQ. And it made sense technically. We had a bullish breaker. And we were watching a PD array expect it to fail. We're anticipating price failing to send price lower on this fair value gap. So we want to see it give way, open, trade down to it on this candle, it rallies, fair value gap, there's a silver bullet, boom.